Hello everyone, I'm Nova Lui, RHB Bank Head of Investors Advisory. Today I'm honored to have Alexander Chia, Head of Regional Equity Research from RHB Investment Bank, to share his thoughts about the recently announced Malaysia Budget 2024. Thank you for joining us today, Alex. Will the latest budget announcement a game changer in shaping KLCI's performance for the rest of 2023 or even up to the year of 2024?
Good morning. Now, I think the budget, while it was expansionary and saw a record allocation of 393.8 billion ringgit, I think ultimately, when you drill down into the details, there were really few surprises in the budget announcement that was not already previously well signaled to the market. So the budget ticks most of the important boxes: fiscal discipline, subsidy rationalization, efforts to broaden the tax base, usual support programs. But I think nothing other than a couple of relatively modest proposals here and there that will shock the market. And I think while it does tick all the boxes, as I mentioned, but again, this is, it's all about incremental gains, choosing the path of least resistance, with e-invoicing initiatives and greater enforcement to plug leakages. So I think overall markets are going to react relatively neutral to this proposal.
Taxation has been a prominent topic in this budget release, with SST seeing an increase from 6 to 8%. While this will boost the government revenue, it also has the potential to dampen consumer spending, thereby reducing overall purchasing power. What is your assessment on the implication of SST?
Now, the broadening of the scope of the services tax component, as well as the increase in the rate to 8% from 6%, really is part of the government's initiatives to broaden the tax base. Now, over the weekend, there was an estimate by one of the tax practitioners that this increase in services tax is going to raise approximately 900 million ringgit, so less than a billion ringgit. It doesn't apply to F&B, it doesn't apply to telecommunication services. So I think the impact on consumer spending, yes, while negative, it will be relatively modest. So it's it's incremental in nature and doesn't really move the needle in a big way.
Okay. LT project and the relaxation of the MM2H rules appear poised to bring positive effect to Penang. Are there specific companies that stand to benefit from these developments?
Yes, I think the MM2H proposals, the previous iteration was always deemed to be overly draconian, and this proposal to relax the MM2H rules will be positive for regions that are likely to see high foreign interests. So Penang is one of them. I think one of the key participants within the Penang infrastructure scene, is a company called SRS. Which is a consortium that is granted by Gamuda. So Gamuda could be one of the key beneficiaries of this proposal to relax MM2H.
Okay, let's move on to a little bit on the EV. Despite the absence of a cut in the petrol subsidies, the budget did include allocation for the expansion of EV charging station and extension of tax and duties incentive to promote EV ownership. Are these significant enough to drive the EV industry in Malaysia?
But I think EV charging infrastructure and EV take up, these are really a chicken and egg kind of situation. So I think base of EV users needs to reach a critical point before it makes sense for the charging infrastructure to be commercially viable. But without charging infrastructure, who is going to buy electric vehicles? So I think this will take time, and ultimately it needs to make commercial both charging infrastructure and EV sales needs to move in tandem in a gradual manner in order to ensure the self-sufficiency within the EV industry.
In order to incentivize greater corporate compliance with ESG standards, various tax incentive has been introduced. Could you provide a brief overview of the key considerations to keep in mind and who stands to benefit the most from this incentive?
Yeah, well, there are a few, ESG-centric kind of initiatives scattered throughout the budget. One of which is a encouragement to move towards the new energy transition program. Some of the initiatives center around encouraging take-up of electric vehicles, and I think there were also some tax exemptions for fund management companies that manage sustainable and responsible investment SRI funds, and also tax deductions on SRI sukuk issuances over the next few years until 2027. Also, the Finance Ministry, Inland Revenue, and Petronas have also been studying tax incentives for carbon capture and storage and hydrogen sulfide projects that will be expected to be finalized by the end of the year. In addition, there are some tax deductions for companies that spend on measurement reporting and verification related to the development of carbon projects. So these are all going to be tax deductible for the sale of carbon credits traded on Bursa Carbon Exchange.
Okay, still back to a little bit on the taxes. So there is also announcement on the taxes on the luxury goods. So who will be adversely impacted on this? Additionally, does the budget contain any substantial provision pertaining to government effort to stimulate the tourism industry, particularly in the light of recent negative coverage on the ASEAN tourism market?
Yeah, I think on the luxury tax, I think a lot of the details are still missing. What constitutes luxury is still very much up in the air. So I think the budget did announce that it will be applied to things like jewelry, watches, and so on. So potentially, some of the jewelry companies could be negatively affected, and potentially some of the high-end malls, could be negatively affected. But we do know that the luxury tax, does not affect tourists. So I think tourists are exempted from paying this luxury tax. So there's probably going to be some sort of a clawback system. But in terms of stimulating the tourism industry, I think there was initiatives, to make 2026 Visit Malaysia year. There's a slight delay from the original proposal to have VMY in 2025. And I expect there will be the longer run up to VMY 2026 will offer more time for the tourism ministry to organize all sorts of events to drum up interest.
Okay, lastly, my question is that would you already have the target for the KLCI index by end of this year? And do you anticipate the opportunities being more widespread or concentrated on just a specific stocks or sector?
Okay, there's no change to our year-end target of 1,500 points for the KLCI. Again, as I mentioned, a lot of the budget initiatives have already been previously well signaled to the market. So very much in the price. I think going forward, the market drivers are going to be more macro. U.S. monetary policy, developments in the Middle East, developments in China's recovery, and I think the winners and losers are already arising from the budget already well signaled. But I think right now our core strategy to approach the markets right now, we are still advocating a relatively defensive stance. We're looking to nibble on weakness, but also to undertake a trading strategy to focus on the stocks that are situational in nature.
Dear investor, thank you very much for tuning to our podcast today. We hope that Alex has shared sufficient insight for you to make better informed investment decision. Please tune in for our other podcast series to get more insight on the latest market update and investment idea from RHB Bank.